Good morning. This is Mayor Valensky with the Driving Markets on Sunday, the 11th of May. This is your weekly podcast. We've got a hell of a lot to discuss and a lot to go over. So let's start. First of all, let's look at what's going on with China and the US, China, Russia, and China and Iran, and Russia and Iran. So let's go into China and the US. Well, the trade war has been at the top of the headlines for weeks now, ever since Trump announced in January that is going to be upping global tariffs, taxes on countries globally, the highest being China with 145%. Now, Trump has been increasing or wants to increase tariffs already back in his first term, and that caused extreme volatility and caused the VIX, which is the volatility index in the US, to go sky high. Now, China being a major trading partner of the US and China needing the US consumer in order to support the Chinese economy is at a loss here. They actually don't know what to do. Now, they are projecting a strong outward face, a strong outward look in order to maintain image and maintain reputation. Now, as far as China's concerned, it's around about 15% of its sales or GDP goes to the US. It's not 100%, it's about 15%, and then the rest goes to its other global trading partners. Now, as far as the US is concerned, the individual in the US or the consumer in the US has around about $80,000 GDP per person in the US, where other countries have anywhere, especially in the West, anywhere between $20,000 and $30,000. So the purchasing power of the US consumer is much greater than any other consumer globally, and that's why it's such an attractive market to get involved in. In fact, if you look globally, everyone wants to export to the US. Now, the US industrial might has been on the decline since 1970s. Probably I would put the actual point at around about Richard Nixon signing off or withdrawing from the gold standard on the US dollar. But for 50, 60 years, there's been a gradual decay, a gradual decline in US status and US industrial power. Whether that was actually a plan or just happened coincidentally, but overall there has been a significant decline. And that, as far as the decline happened in the US, equal and opposite, there was an upward momentum in Germany and Japan in the 70s and 80s, where Germany and Japan produced good quality, cheaper goods. The cheaper came from Japan and the quality came from Germany. So they took over and competed with the US industrial might back in the 70s, 80s, 90s. And you could see that steel, shipbuilding, industrial manufacturing declined significantly in the US. Now we've got to a stage now where in 2000, the late 90s, in 2000, China came to the fore, and they now become the third industrial power, with Japan and Germany really accelerating the decline and the decay of the US might in the industrial sector. That decay was continuing with no end in sight under administrations of Obama or under Biden. In fact, Biden was quite happy to authorize the sale of US steel to Japanese steel manufacturers like Nippon Steel, and that would have put another nail in the coffin of the industrial might of Japan. Of the US, excuse me, of the US. However, Trump has come along and said specifically, or his policies are specifically, to redirect and reignite the industrial might of the US. And that's one of the reasons why he's imposed trade tax or trade tariffs on global partners, because he wants the knowledge to be retained in the US, and as such, if he didn't, then the knowledge and the know-how would disappear, and the US would lose forever its ability to be an industrial power like it was in the 50s and 60s. So that is one aspect of the trade war. By him looking to protect US industrial power, he's actually maintaining the knowledge within the US. In addition to that, he's causing the repatriation of US companies to move back into the US for production to avoid the extra taxes and tariffs that would be applied as a result of them manufacturing overseas and then exporting to the US. So that will bring significant further investment by these companies having to relocate and reallocate resources into the US, increasing employment. Now, talking about slightly employment before we get back to China, there will be a rise in unemployment in the US, and that's not due to the fact that the numbers have risen. It's just due to the fact that the way unemployment is measured is that under previous administrations, unemployment is measured as those who are actively seeking work. However, if the people have fallen out of the workforce and are not actively seeking work, then they're not considered unemployed. But now those individuals will actively be seeking work due to the increased demand for labor and the opportunities out there. So you will see unemployment rise as a result because the numbers will flow back into the lists of people looking for work, and therefore, by definition, you're going to have an increase in unemployment. Going back to China, so China has seen last week a significant increase in exports up from 1.9% expected to 8.2%, which is a massive jump. However, exports to the US have dropped by 21%. So is China replacing the US with other partners? Could be, however, that could only be a temporary measure. They are trying to reallocate their manufacturing to countries like Vietnam, Cambodia, etc., in order to export via those countries and avoid the 145% trade tax or tariff that's been applied to Chinese goods. China has agreed to talks in Switzerland with US representatives, so we'll see what's going to come out from that. Again, if an agreement is reached that will impact markets, markets have already absorbed the news of trade wars and have moved higher, so there is a risk on appetite short term in financial markets. So you could see markets push higher by another 5%, 6%, and then probably again fall because overall we are in a bear market. So you could see markets fall after the initial rise further. Now, we did buy Tesla at 213. We bought Palantir at 74, and those have shown significant profits. So we could be looking to take puts out on Palantir, for example, which has run up to $117, $118. Talking about Russia and China, or China and Russia, they've just signed a further understanding of trade partnership in order to get around the US sanctions or US trade war, and they're looking to replace each other's business. However, neither of them trust each other, and they're very underhand with their approach. So I don't think that's going to take off, even though a headline does look favorable for China-Russia treaty. It's unlikely it's going to go ahead. As far as Iran is concerned, Iran is a major partner of Russia and a major partner of China. So to China, it supplies oil, and then in return it gets Chinese technology. Into Russia, it supplies military weapons. In fact, it's signed a deal to supply the Fatah 360 ballistic missile to Russia, and Russia wants to use that as a weapon in its negotiations on the peace deal against the Ukrainians. So there is an axis there of Iran, Russia, and China, which is being placed against the US. Meanwhile, Trump is off to Saudi Arabia to sign a multi-billion-dollar defense deal, and that will pour billions into the defense sector in the US, boosting shares like McDonnell Douglas, Lockheed Martin, any other defense stocks. You can expect more deals like that coming from Saudi Arabia, Qatar, Kuwait. In fact, the oil-rich countries in the Middle East will be looking to sign defense deals with Trump, so that will bring further billions into the US economy. If they bring further billions into the US economy, even though the last quarter showed a negative GDP of minus 0.3%, mainly due to the sacking or firing of government workers and the trade wars, government workers' salaries also add to GDP. So by the sacking of the Washington useless, parasitical, empty offices that were set up under Biden Harris, then that is not only raising unemployment but also reducing GDP. You can't expect another quarter of GDP to be negative, and that would bring in an official recession. However, I do expect that to be short lived, quite simple, based on the fact that you've got huge amounts of foreign investment now coming into the US at the moment. It's about $5.2 trillion, and with a huge foreign investment coming in and further deals being done, like the defense deal we've just spoken about a few seconds ago, a few minutes ago, then that is dollars pouring into the US. So the dollar has to be bought, and that is going to create jobs and industry, strengthen industry in the US. And that's what Trump is good at, is good at making deals. As regards overall US and UK, they've done a deal last week, but it's unclear of the details, so I can't really comment on that, even though Keir Starmer, the UK Prime Minister, has a 25% popularity rating, the lowest ever in history. He is an insipid wimp of a leader, and really the best thing for him to do would be resign and go home. In fact, it'd be good for the whole Labour Party to resign and go home, because they are dysfunctional and looking to destroy the Great Britain and take the great out of Britain and make it absolutely useless, with migrants, illegal migrants, and crime on the rise, with their diversity enforcement policemen looking to arrest anyone who puts anything on social media or is deemed to be anti-migrants or anti-Islam. That's the one held out for the local English, who will be arrested and put in prison if they comment anything. Meanwhile, as far as financial markets are concerned, then we do expect a further rise in financial markets and then probably a significant pullback. As regards gold, also short term, we're big on gold, and we can see gold moving up to around about 3,750 on May the 11th to about the end of May. And then once it touches that, we could see it pull back all the way to 2.8 or 2.6. Just be aware of that, but that would be short-lived before it will spike up again. So you've got to be aware of that. We do run, obviously, trading groups on stocks and shares, on gold, on indices, and we have beginners groups. And of course, we have a seminar in June on learning how to trade. So we do have a whole shebang. That's it for now. This is Meyer Valensky with Driving Markets. You can download this on Apple, Google, Amazon, or any of your favorite podcast platforms. And if you want to get involved in the mentorship, then you can go on to drivingmarkets.com and sign up there. Have a good day.